Investors and traders, welcome to the channel. Today is 3rd of November 2024. Hope everyone is having a great weekend. We will be going through the key US markets in this video. We will cover the US dollar. We'll cover some of the major indices, gold and silver briefly, and then we will also begin to take a look at the bond markets and then a deeper dive into the US stock indices, the major ones. This is going to be a quick video because of the travel, and as always, this video is for educational purposes only, and it is not a financial advice. For the new subscribers, what we are looking at is our timing model. It has had a pretty good record of picking turns in the market. And what we are looking at is this key date of 7th of November coming up. With the timing on the daily chart, we have to give it 2 to 3 trading days on either side of this date. Another importance of 7th of November is this is when the Federal Reserve is coming out with its interest rate decision, whether they will be cutting or whether they will hold. Or if they're going to cut, then by how much. So really interesting economic events happening in this week, and a few other events as well, which we're not going to go into the details of. But 7th of November, give it 2 to 3 trading days on either side. Now let's take a look at the US dollar. Here we go. This is the daily chart of the US dollar. So US dollar, we have the 107 level picked as a real key top in the market, and here we go, and it had a top double top, and then here we had a double top with respect to the top over here. We had our patterns that we were watching, and we had a target for this market to get down to around here. Is more easily visible on the weekly chart. Here we go. This is the gray zone that we were expecting this market to get into, and the market did. And then look, it has had a fantastic rally. It has rallied right to the 61.8% retracement of the highs of 107 to the lows, which were around here, around 99.30. Now this could prove to be a resistance level, and what we have seen is, although the last week Friday the dollar was pretty strong, but if you look at the weekly candle, it's shown a little bit of indecision right here at the top. Moving back down to the daily chart, here we go. You can see that it found some resistance from the 61.8% retracement of this entire range, and last Friday it just went roaring back. So it's actually in a trading range formation. And so we'll just keep on watching this 104.30 level, which is our 61.8% retracement. Another thing that I really want to emphasize on is that unless the US dollar breaks this 99 or 98 level, this is a really strong level for the US dollar. We are actually likely to be in a range bound market. It's only at the break of the 99 level, and in particular 98, that we could see the market actually decelerate down right towards the 91. There we go, 91.50, which is going to be completing this ABCD pattern. Till then, the market is likely to be range bound. It tested the bottom of this range, and now it's kind of in the middle of this range, with the chances that if it is able to break above the 61.8% Fibonacci retracement, 104.30, it could actually go for 106 challenge of the upper range of this trading range. Okay, now while we're at it, just have a real quick look. Here we go. This is the really long-term chart. This is the monthly chart of the US dollar. And here I just want to reiterate one of the key things, that from a market symmetry perspective, there's a possibility the US dollar might have topped longer term, but it doesn't mean that it cannot have really fantastic rallies. If you go back right here, this is the part of when the dollar bottomed in early 1990s, and then for a decade it had been just rallying. But look, these rallies, it had fantastic rally to challenge these highs, and it was approximately it took 10 years. And now this rally, when the bull market started in 2011 in the US dollar, it made a high in the month of September 2022, and it was approximately 12 years. So there is symmetry in the market from a timing perspective. So the real key, as I said, is to watch the 99 and 98 level. If the dollar breaks down, then it means that we could come quite a lot lower in the US dollar, and on the flip side of the US dollar, we have other currencies, including gold, which could actually benefit out of it if that were to take place. Now, let's have a real quick look at some of the major currencies. So, Euro USD, here we go. So, Euro USD, you can see that how strong the dollar is. Euro USD in the dollar index basket is about 51%. So it's kind of a mirror image, but not 100%. And what we see is that this market is pretty weak actually. It wasn't even able to make the 38.2% retracement of this swing high to low. It did find some support from this trend line, and it's just trying to make a recovery, but looks pretty weak. Now, one of the most interesting one is actually the British pound. There we go here. Let me pick up the FXCM one. This is the one we were using for our analysis. Right here at the 134.20 level is where we had major resistance coming into this market, and that is because of the 1.272 expansion of this range. We got a number of these extended ABCDs completing here. The red one here, the black one is where CD leg is extended by 1.272 of the AB leg. And here what the market has done now is it has retraced what it had done before. So this is the retracement, the major retracement in this move higher that we had seen previously, and in terms of absolute move, this is what the market has done. Although we can see that this trend line is broken, but it is actually entering into a region where there is pretty good support, and that support is coming between 128.80 to 127.30. Right at the 128.80, we have the 1.272 expansion of this swing low to high here, and then we also have the 50% retracement of this low to this high, and then what we have also got is 1.618 expansion of this swing low to high, and then we also have the 61.8% retracement of this low to this high come in. So between this region there is pretty good support coming in for the British pound. Now let's take a look at the Japanese yen. Here we go. So you can see that the Japanese yen, ever since it completed this pattern formation highlighted in green, it's also double bottom with respect to this bottom here. It's just been on a fantastic rise higher. So we thought that it was completing a 38.2% retracement here, ABCD. At this point, we could see at least a retracement back into this region. The market has been stronger, or the US dollar has been stronger, much stronger versus the Japanese yen, and we have seen a continued rally higher. And what it has done is it has retraced very close to the 61.8% retracement from these highs. There we go. So this is what we are watching here. Looking at this price action around here, right, right around the 61.8% retracement, that could prove to be a resistance level. We are watching the 154 to 155 region in the Japanese yen versus the US dollar. Now let's take a look at the bond market. Something really interesting happening in the bond markets. Really important to take a look at this. This is the shorter end of the curve. This is the 2-year Treasury note, and ever since it completed this big ABCD pattern, it was right here when we were calling for a move down to 3.9%. It's right here when it was completing this ABCD pattern right here. And then once it broke this support coming in from 38.2% retracement and also the structure, we had this really quick move to the downside. It even exceeded 3.9% target, then found support from the structure around here. And then what it has done is it has retraced quite a bit of this entire move high to low here. And there is a chance it could even go higher to 4.3%. So yields are rising higher, and that's not going to be too good for the stock indices. We'll take a look at that a little bit later on. Now, the most alarming of the charts is this one. This is the 10-year Treasury note futures. And look, ever since it completed this ABCD, right here, this is when the 5th of August happened. That's when there was a lot of volatility coming into the stock indices, but also bottomed. We also had key timing come in that day. It just made a double top formation around here, and it's just been moving lower. there is some trend line support coming in, but the way this market is really, really alarming, and the yields are really rising on the 10-year node. Now, 10-year node is really an important one, because this is where your credit cards, they look at this as the benchmark for their interest rates. Auto loans, many things, many kind of different loans get marked off it. So this is a really important market to watch, one of the biggest interest rate markets that exist out there, which is the 10-year treasury note. Once it broke below this 38.2% retracement around 111 and 24 seconds, this market is really, really weak. What we can also see is right there, we have the 61.8% retracement around 109.8 seconds. This is where most likely this market is heading. Well, it is also telling us something, that the market is telling us a narrative that perhaps the next candidate in the US might be someone who likes lower interest rates and also a lot of spending, and perhaps this is something which the bond market doesn't like. So we'll have to wait and see. But this price action is really, really troubling in the 10-year. And then if we take a look at the long bond futures, so this is the 30-year note, 30-year bond. We had this ABCD marked out, but the market is really weak now. So ever since the 10-year completed its ABCD, the chances of this one happening are now very less, and in my next videos I might actually even remove it. We were watching this pattern formation because there was really, really good support coming in around the 119 and 20 seconds. Once market broke that, also broke this trend line, and now it's likely to go ahead and find some sort of support around 115 roughly. So we'll have to wait and see. But these interest rate markets, the long bond futures, the 10-year treasury notes, these markets, the bond markets look pretty troubling here. Okay, now let's take a look at the gold market. So here we go. I'm gonna go back to this. This is the, actually, let's take a look at the really long-term monthly chart. Here we go. So what we have going on in gold is, as you guys know, we have some really, really long-term patterns, really, really long-term ABCDs, which are the cycles completing in the gold market. So we had 27.25 as our target, and then we had also higher targets as well, because the next psychological level in gold is 3,000. But there are so many of these patterns which are completing around here. We are actually in a zone, in a region where the gold market could actually face pretty strong resistance, and the market had been so strong. It's only pretty recently, when we just go down to, here we go, on a daily chart, that we begin to see that some selling is coming into this market. So it hit about 2800. Now this is the gold, COMEX gold. This is futures. If you're watching the spot market, your prices are going to be a little bit different, but this is the continuous contract constructed by TradingView for the gold market. So we'll just keep on watching this. The chances are that maybe there are going to be some margin calls coming in. I don't know exactly what, but we could actually see some pullback happen in the gold market. This day on 31st of October, last Thursday, the gold had a pullback of $45. That's quite significant. So we'll just keep on watching this. There's possibility we could see some retracement take place in the gold market, some sort of resistance come in. And if we move down to the silver market, you can see that it is much weaker than the gold market. And also it completed our targets. We were watching for 33.85 with a possibility of 35.30. It came pretty close to that. The highest was 35.07, so pretty close, not exact same target, but right into the vicinity of where we were thinking this market is likely to go and complete this ABCD, which it did, and now it is pulling back. There should be some support from this trend line. If it is broken to the downside, there is much bigger pullback coming in this market. Now let's begin to take a look at quite quickly on the US stock indices. Let's start with the S&P 500. This is the cash market. Here we go. So Here, one of the things that we were watching for was a possibility that it could hit the 6,000 level. And one of the things that I wasn't sure was whether it was going to do that before the US elections or after. And we had this zone marked here, this gray box, with a potential that market could get into a fair amount of resistance. And this is what we are seeing. Actually, the market went into it, and now it is actually pulling back. And if we take a look at this on the futures market, this is the S&P 500 E-mini futures daily chart. We can see that right into this box, it also completed this ABCD, the blue one, right to the tick, and we have seen a pullback happen. There is some structural support around here. The market could do more of a trading range, but look at this. The trend line is actually broken, and if it just begins to take these swing lows out, this one, we can see this market pull back 5670, and then 55 or 5600 is where we could see some sort of support come in. Let me see what sort of retracement that might be, and that is going to be, yeah, so this spot is actually about 50% to 61.8%. That's the kind of zone the market is likely to find support if it breaks this structural support and pull back into it. Now let's take a look at the weekly chart for the S&P 500 futures. We did have higher targets, but on the daily chart we were also hitting resistance levels. So the market is pulling back right here. There is a chance we might have seen some sort of a pretty important top already come in, or we could see a little bit higher market go and complete this exact ABCD here. That also remains a possibility. So really important week coming up next week in the market, so we'll just keep on watching. I think we are already beginning to see the volatility pick up in the markets. Now let's take a look at the NASDAQ 100 futures. Here, one of the things is that this market completed this big ABCD pattern, and it just pulled back. This pullback was quite a bit. I believe the market actually pulled back about 20% right here, 5th of August lows. Now it's just, it's just a recovery high. It's not able to make a new all-time high. And the last week was pretty, there was bearishness which came into this market. So the NASDAQ has completed this big ABCD. The S&P 500 cash and also the futures, they came pretty close to completing it, and sometimes the close is just close enough. So with these major patterns completing, we are likely to see more volatility entered into the market, and some sort of pullback could actually take place. Now let's take a look at the Dow Jones. This is the Dow Jones futures chart. Here we had our target. I'm going to show that to you on the daily chart. Here we go. We were looking for this market to get into this gray box. It did, and then it has pulled back. What is alarming about this market is it has already taken out this structural support here. S&P 500 did not do that yet. But if the Dow has done it, the chances are it will do that as well. One of the big differences between Dow Jones index and the S&P 500 and also the NASDAQ is that Dow Jones is price weighted, whereas those indices are market value, market cap weighted, which means that in Dow Jones, if there is a stock which is higher price, such as Goldman Sachs stock, and if it has a big move up or down, that is going to influence the index quite a lot. So here, from the lows of 31st of October, it rallied right to the 38.2%, and it closed right into the middle, so it found resistance here. The chances are we could actually pull back right into even 41,168. Let me actually draw this a little bit differently. Here we go. So 41,681 to 41,168 is the kind of pullback we can see. And in terms of the retracements, yep, it's right into that zone as well. Okay, and last but not least, let's take a look at the Russell 2000. This market is much weaker. It also pretty much completed, not exactly, but it went into this gray zone. It touched the lower boundary of it, and there was a chance it could actually get right into the middle of it and complete this ABCD, but this just came pretty close enough. Now you can see that it's just in a in a trading range. If it break below the lows of 10th of October, the chances are it could actually pull back a little bit further. And 5th of August is actually the real important low to watch. If the market breaks this low, then we can see a pullback of larger degree take place in the markets. So thank you very much for watching the video. This is a quick video to cover the different markets and the price action that took place over the course of last trading week. I hope everyone is having a great weekend, and thank you for watching the video. Good luck to trading, and speak to you guys soon.